Good evening, and I hope you're doing well. We are euphoria, which I said that we would be from yesterday. We did have a little dip into complacency, and that was because the technical scores fell, and we have seen a rebound, which kind of makes sense that we would because we're green up here. And the herd have really sold over the last 24 hours. It's quite a significant change. There's an extra three people short in indices now. There were 16 people yesterday, now there's 20. So there's 20 bears versus the one bull. So we might see this big picture go further and further away from zero. And if so, we're just going to continue pumping risk appetite. Okay, so I want to show you Dixie, and I want to show you the ES, which is the S&P, the E-mini S&P futures. And so let's talk about the sentiment part, and then we can look at the technicals. And the robot was a nothing to write home about because we're flat. We had a negative R, and then we had a 1R, so it cancelled each other out. See, that's strange. You see that technical score? So something is going on. So we're complacency now. So something is bobbing around. Oh, it might be that Russell 2000. That might be it. Oh, and the Dow Jones has just gone negative. So we are fluctuating a lot. So you've got to be careful. I think that's a really good sign and a good omen just to be careful and know where your exits are. Because really what happened is if we had a big decline on the indices, it's going to impact your FX pairs. And most of you are trading currencies. So you do need to know about the risk appetite. If the risk appetite's going back and forth, so are your trades in FX. So you need to be really careful. And I think that move there was from the Dow and the Russell. Now, if the Nasdaq and the S&P join, then we're going to go quite red on the technical scores, and we are quite pretty much sitting on the fence. So VIX is also sitting on the fence as well. I'm not sure about Tesla. That's obviously something that Elon's probably tweeted, and that really got the investors excited about something. I don't know. But that's just like a separate issue. So currently we're sitting on the fence. Okay, so we may see this go back to euphoria, or we might just be sitting at complacency. Now, the thing that I was thinking about, the VIX was down 18% in 48 hours. You could probably argue that was like massively oversold. So we could really be rebounding a little bit on the VIX. So you have to look on the flip side. Even though we might be euphoric, we could also be at a point where the VIX dumps so hard it might attract some buyers, to get a good entry. Those people, those traders and those banks who trade volatility. It's a nice instrument to trade if you've got access to it and you've got vast amounts of capital. And so that is of note. I think we might just go back and forth. And then that would explain also why our robot was flat today, because it uses the technical go, no go conditions and the Twitter sentiment as well. And if the technicals are going back and forth, it's sort of indicative of risk appetite, because the Euro USD will move with risk on or risk off flows. So I think we're pretty much got to be careful, I think, as we go into this close, and it could be setting up for a bit of a wobble. So come to Wednesday. EG's now sell, so be careful there. That it's rinsed out a lot of retail traders on its way up, and now it's going to rinse them on the way down. So it's just pretty nasty. It's a pretty horrible pair, but at least it's not too bad to trade because it's kind of range bound. So you can trade it without having like massively wide stops. Unlike something like the dollar yen, it will take, it probably moves like 1,000 pips. So you can't really trade that at wide stops because you'll blow up. And also, we did hit 155 today as well, and that's the BOJ intervention level in speech marks. Okay, so Germany and UK have moved. Their sentiment has moved for buy, and because of that, it's impacted our 24-hour, which then in turn impacts the big picture. So I'm wondering about this. So what will probably happen is that this time tomorrow we'll have probably maybe a red sell in here, and then we could be, depending on what the herd do, we could be into like an apprehension. So we could be red on the technicals, and then we will have to wait until tomorrow night to see what happens here, because what happens here is going to feed into this. So we may be complacent We'll have to wait and see. And don't forget their score yesterday was absolutely bonkers as well. It was 100%. We were so bullish yesterday, so it could be a little bit of profit taking, a little bit of a wobble, and also that VIX got really crushed, so it could be attracting some buyers. So that's just a bit of the sentiment. Note that the dollar's got a good score still, but it's currently battling the euro. So if you're trading the euro USD, which is what the bot's doing, you're going to get a lot of hustle, a lot of tug of war, and there's not like a clear winner. I know it's 10-10 now. So it's probably something we could potentially use on here, is that we could potentially use this to get like synthetic currency pairs. So for example, if the euro lost point against the USD, then we could set up a trade opportunity, on the robot. Potentially, it's something we could look at. And for example, say if like the Aussie increased over CAD, which it has done, we could look for Aussie CAD long. So I don't know if that was any good. We'll have to wait and see. Come to FX. Yeah, so we were quite positive today, 0.49, nearly 0.5% based on that. And so that's what we could do. We could have a look at this, where there's something strong against a weak currency. We've got a setup, and like it's very, very, very easy to establish trade ideas from using that. So ES, right, S&P, pitchfork, okay. And now I'll point you to Discord. Come to US 500. And this is from yesterday. Okay, so I was saying, hexagon likely scenario, and it was a coincidence, I don't know, but we hit it on the nose. Well, actually, we did go over a little bit, but then we created a supply at the pitchfork resistance. And then zooming in, this was really spooky. It was these two hourly candles. And now what's happened with the sentiment is that they'd sold it, so we had a big pump. Now this arrow here coincides with this square. So them going long, right here and here-ish. And so they tried to buy as they wanted the. We were going to have a pitchfork break, and then they try to buy, but they wouldn't be looking at pitchforks, but they just happened to buy at that point, and then doing so caused price to fall. There, you see, so hopefully that makes sense, right? They've gone long, price fell, and they just happened to go long at pitchfork resistance. So it was quite a good one, very, very spooky. So that's S&P. I guess we could look at Dow, I suppose. This might be better and easier because I can point to yesterday and today. So how did we go? So yesterday they'd sold. So they'd sold quite heavily. All right, so come here, and they got punished, didn't they? And now they've gone long, so the price fell. And now what happened is that we're currently waiting to see if we're going to get a crossover. I think it's going to be likely. If they sell it, we'll be above this box. And like my comment says, they're pretty keen to short. That's just their inherent nature as traders. They love to sell indices, and they won't look at like the big picture. And inevitably, they're going to get burned. Look at that move. Crazy, isn't it? So that was one of the selling. See, boom, and they sold it again, boom. And that's the move there. They sold quite heavily, and there you go. You can see how it develops over time. It's quite interesting, isn't it? How it become, and now at that point, we got to exhaustion, and we saw less short. Less short is like more long, okay? And then that action pushes price lower. So this might be a good way to do it. I think this is what we'll do, and then we can look at yesterday and the day prior, and then we can see how things develop over time. Because I could show you where we are now, but it might be better just to look, at past screenshots. Someone's put something in gold, so we can look at gold here. So it won't be to do with sentiment. That would be technical. We kind of want to look at the sentiment. Gold. So currently sideways. Now the thing is with gold, this is what I was thinking, like this point here is that they'd gone long and then they got paid, then they got initially paid for like 2 hours, then they got punished, they'd sold here and then they got paid. So this move here could mean that they're going to get punished. So what happened here is that, you know, they went long, they got paid initially, and it dumped. They sold, they got paid initially a couple of hours, you know, 2 hours there, 2 hours there, and up we come. So, but the only thing is with the sideways currently, but this could be a trap on that. So, kind of covered the indices, covered gold, could look at the robot, and there won't be much to say about the robot. Basically, because we had a flat day. Basically, we had a -1R, which I can show you actually. So yeah, we wanted it 107.15. Okay, look at where we got to. It's 107.13, 14. So we were 1 pip away from getting profit, and then we, you know, we came down here, and then we wanted to break this level here. So we needed 106, anything below 106.80, and it did this sideways stuff, and then we dumped, and then we got out of profit. So this was a tiny loss, and this was a profit. So we were flat today, but we could have had a 2R trade had we just pumped a little bit more. Had we just pumped like 2 pips there, then we would have been successful trade on the upside, 1R, successful trade to the downside, 2R. So it would have been a good day, but we're just flat. And so that's really today's video. And I'll feedback or come back to the comment on gold. So it's my hypothesis about whether or not it's a trap or not, so we can discuss that. So if you've got any input, or if you want to join us, and if you're, you know, a trader and you trade gold or anything, you're more than welcome to put your own thought processes in, because the more heads are the better, you know, for the analysis. So, you know, if I just solely produce content, it's kind of just a bit narrow-minded. If we get all together and we can share ideas, then it's going to be better for everyone. So I think I do a good job, but definitely more is definitely welcome. And so that's it. So I'll be back tomorrow. I'm going to take Friday afternoon off because I want to have a break, and I've got some stuff to do, and it's been quite a choppy week. Hopefully next week's going to be a bit easier, and we'll have a lot of profit on the robot, because last week we had a 10R week. This week we're pretty much flat and there's no profit. But it's going to be one for the long haul, I think. And it's just this week is going to be a bit of a funny one, because the last 2 weeks were quite bearish. And so we could be at that point of being like a buy from a bank perspective. So it's all eyes on that risk calc. And say the euro is ticking higher above the dollar. So it's all about the risk calc and whether or not we're going to wobble, which I think is very likely. And they're probably going to try and crush the VIX, because if that does pump, these will fall, and they could fall quite heavily as well. Trade safely, and I'll speak to you soon. One and all, we have a strong disclaimer that we need to stipulate. The fact is that it's really, really easy to lose money while trading, and you absolutely must have risk management at the forefront of your mind at every trade decision. Before you enter, you need to know where your exit is. You don't just enter willy-nilly. You need to stipulate your stop loss, and you need to know about your sizing as well. All this information is in the Discord as well, and it's also on YouTube. So if you don't know your sizes, and then you don't know your stop loss, you're going to encounter horrific losses, okay? And also it's highly risky, and the stuff that I put out on a daily basis, it's for your own information. It's not to be traded on its own. You need to be used with a trading system and with a risk management at the forefront of that system at all times. You can't trade without the risk management, because you will blow your money. And I dare say, if you're watching this video, you would have lost a lot of money, and you've blown maybe an account or even several. So it's absolutely critical that you've got a very keen sense of risk management at everything you do. It's like crossing a busy street. You wouldn't cross the road without looking left and right. You'd wait for the traffic light and then it would go from red, amber, green, and then once it went to green, you'd still be careful. Okay, so just a quick video there, and be really careful. It's a highly volatile market. In fact, it's probably the most volatile market you could ever get into, and while it can make you a lot of money, it can also cause catastrophic losses. So be careful at all times.